What's up guys, Nick here back with a quick video to end out 2022. So as we come to the end of the year, this is now your last chance to save money thanks to the bear market. Now I know what you're probably thinking, yeah, no thanks, I have way too much stuff to worry about right now, I do not have time for this nonsense. But if you actually are sitting on losses right now and you don't go and do this, well then you must just hate money because it is stupidly easy to do and it could easily save you a couple $100 to a couple $1,000 on your taxes. So how do you actually do this? Well, I'm going to go off the assumption that, again, most of you have losses in your account at this point. And now when I say losses, I don't mean stocks that are down for the year. I mean stocks that are down from your initial purchase price. Well, most of the time you would sit around and just wait for things to eventually turn around, and generally I think that that is a pretty good idea. But because we are at the end of the year, now is actually a really good time to go ahead and lock in those losses. And the reason why is because when you sell a stock for a loss, that's called a capital loss. You can take capital losses and use that to reduce your income on your taxes by up to $3,000 a year. So for example, if you made an investment and now that investment's dropped by $1,000, you can actually sell that stock now and then use that to reduce your taxable income by $1,000, reducing your tax bill and saving you money. So for example, let's say I own 100 shares of Tesla that I bought back at the market peak in November of 2021. Back when the Tesla hype was really at its peak and it seemed like that stock was on its way to the moon. But unfortunately, that's not how things ended up working out. Tesla stock dropped from $407 at the peak all the way to $135 per share today, which is a loss of $2,680 on those hypothetical 10 shares. So instead of bag holding and just waiting for Elon to get off Twitter and start actually running Tesla again, we can make the best of a bad situation here by selling our Tesla stock for a loss. And by using this strategy, we can reduce our taxable income by up to $3,000 per year. So for all those Tesla bulls that bought back in November of 2021, I hope this helps you out. But if the wheels are already turning in your head and you're thinking, alright, here's what I do. I sell my Tesla stock for a loss, and then I just buy the stock right back. Sorry, the IRS is just one step ahead of you. It is not quite that easy. You still have to follow what's called the wash sale rule, which basically means that if you sell a stock and then you buy either that same stock or what they define as a substantially similar stock, for example, selling those losing Tesla shares and then buying them right back, those capital losses don't count, so you can't write them off on your taxes. And that also goes for other things like if you own Google Class A shares and you sell those and buy the Google Class C shares, those are still substantially similar, so don't try that either. So what can you do? Because you probably don't want to sit around on cash just in case the market does actually come back up, which who knows what's going to happen at this point. So what I did was I sold my Amazon, Meta, and Ford shares and a few others for around a $27,000 loss. And instead of just having a whole bunch of cash sitting around, I decided, well, why don't I just buy the best index fund that I can think of, Berkshire Hathaway Class B shares. We all get on this website trying to be Warren Buffett. Why don't you just let Warren Buffett invest your money for you? But that's just one idea. There is a million others. You can try index funds. Be careful though if you sell SPY, then try and buy something like VOO that might be considered a substantially similar stock. You're not really going to know until you submit your taxes and the IRS reviews what you sent them, so be careful. There's also relatively safe blue chip stocks that you can find, so be creative and just find somewhere to park that money for at least the next 90 days. If you want to get back into the stock, it's totally fine after 30 days, but you just gotta wait for that 30-day window to pass. Also keep in mind that if you do all of your stock trading on an IRA or a 401k, that those are tax advantaged accounts and none of this is going to actually apply to them, so don't try that. Should seem obvious, but you never know. And of course, as always, consult with a tax professional if you want to get real advice. This is YouTube. I'm just telling you the idea to look into, but of course I'm not a financial advisor or a tax accountant, so make sure you talk to them about your particular situation before you do anything. But I hope this saves you all some money because I know it's been a tough year for most of us. It certainly has for me. And as always, thanks for watching.